I'm Shay Russell for mining.com.au, and joining me today is Pan Asia Metals Managing Director Paul Locke. Paul, welcome back. Good to have you here again.
Hi Shay, how are you?
I'm well, thank you. But more importantly, I've brought you on today because I'm hoping you can demystify a certain phrase I heard from from a webinar you did the other day. Now, you used a phrase called in this webinar, "at the money facilities." Now, those with a finance background might automatically correlate that phrase to options trading. I don't think it relates to this. What I want to know is, how does that phrase relate to lithium projects in South America?
Okay, Shay. Well, a questioner asked me about ATMs at or actually, I think they're at the market. But anyway, um, and they're a type of finance facility companies can use to help them raise money. And when you look at your capital structure and your tools, you want a set of instruments which complement you in raising money efficiently, and these are meant to help do it. But in this case, the questioner asked, "Is it a death spiral?" And a death spiral is basically some sort of facility where, when you employ it, um, the way it's structured is you dilute your shares and your share price will drop, and it can cause a lot of damage. So there's a big reluctance with ATMs because of this history. So there are two types of, well, there's a big range, and like any contract, you can negotiate a whole range of scenarios. But at the good end, a basic ATM facility is where an intermediary will sell your shares into the market as a means of raising cash. And if they're good at what they do, they only do this when your shares are highly liquid. So there's no effect. That's what you want. And you only use them in certain circumstances. The death spirals, the bad ATMs, are quite the opposite. And that's where an intermediary will give you, say, $1 million, and then will sell shares in the market to get their $1 million back. And generally they go in several tranches. So a really bad one will have 5 tranches, 3 to 5 tranches, $1 million each, say, and you take your $1 million, they sell shares in the market, get the $1 million back, give you another $1 million, and pretty quickly the market learns about this and your share price starts taking a dive because there's no minimum price they can sell it. They just keep selling till they get their money back. And to give you some idea, Shay, of the cost, a standard at the money equity line, which is set up properly, might cost you 6 or 7%. So about the same as brokerage fees, and that's it. So if I'm raising $1 million, it would cost me $70,000. At the money facility or an equity line with what we call a moving VWAP, so the selling price is moving all the time. If I raise $1 million and I include all the attachments to it, which could include options and so on, that $1 million would ultimately, before this drop in share price, cost me $500,000. And this is where companies really come a cropper, really. Their capital structures get ruined because it's really a pretty bad facility. It's something you'd find in the red light district of most cities.
Listen, Paul, what prompted this particular attendee to ask this question?
Well, we recently completed a placement, and that placement consisted of 2 items. We raised cash of about 1.265 million, and we had a $10 million ATM equity line. And so when readers or shareholders see that, they get nervous, and justly so, because there have been some absolute disasters. So we're very careful with our capital structure. We don't employ options. Management doesn't have lots of options or anything like that because we want to preserve wealth for our shareholders, including management.
Now, Paul, prior to becoming the managing director of Pan Asia Metals, you actually had an extensive financial career. Can you please sort of elaborate on that? Because you've used a whole bunch of words that people might not expect from the average mining executive.
Well, Shay, I used to work as a options trader, a derivatives trader, and I used to work on over-the-counter options. So they're customized and complex derivatives. And so I learned a lot about options trading there and the advantages and disadvantages of them. And I used to be a project financier to minerals projects and leverage buyout. So I learned a lot there. So when it comes to funding projects and capital structures, and hopefully not how to wreck them, that's where I really focus.
Paul, that is an excellent knowledge base to take into Pan Asia Metals, and I look forward to what comes next for the company. Thank you so much for being here, Paul.
Thanks, Shay. Talk soon. Cheers.